Ondas Inc. is currently trading at 11.26 USD, down 1.02 or 8.27% today as the market digests a massive amount of conflicting data regarding its recent capital moves and operational wins. While a nearly 10% drop in a single session might look like a disaster for some, there is a technical layer here that most casual retail traders on a standard individual brokerage or the Robinhood app might be missing. We are seeing a classic example of sell the news happening in real time following the company's announcement that its American Robotics Optimus drone has finally landed on the Defense Contract Management Agency's Blue UAS cleared list. For those unfamiliar with federal procurement, that list is the golden ticket. It essentially bypasses the bureaucratic nightmare that usually keeps small-cap tech away from government contracts. So why is the stock bleeding? The insight most people are missing is the overhang of the recent $1 billion capital raise. When a company with a market cap around $5 billion raises $1 billion in a single shot, the dilution math starts to weigh heavier on the tape than the excitement of a new government certification. Investors who use interactive brokers trading platforms or more sophisticated institutional tools are likely watching the warrants and convertible debt conversions more closely than the headlines about drone certifications. The expectation in the market right now is that Ondas is the next small-cap darling in the defense sector, a name that could eventually follow the trajectory of something like NVIDIA stock if it manages to corner the autonomous infrastructure market. The reality is much more complicated. While the company is hitting its operational milestones with surgical precision, integrating the RoboTeam acquisition and securing border protection contracts, the financial structure of the company is undergoing a massive transformation that creates short-term turbulence. Many people looking for investment help or browsing investing sites see the 180% growth in backlog and think it is an easy win. However, the reality is that the market is currently pricing in the risk of how that $1 billion in new capital will be deployed. If they overpay for their next acquisition, or if the integration of their counter-UAS systems into European airports hits a snag, that cash pile becomes a burden rather than a fuel source. This tension between the year of the drone narrative and the cold hard math of share count expansion is exactly why the price action is so volatile today compared to the relatively steady moves we see in Apple stock or other megacaps. Looking at the intraday movement, we saw a brief attempt to hold the $12 level before the selling pressure intensified. This volume is not coming from your average hobbyist on a mobile app. We are seeing significant institutional rotation. When you look at the recent filings, names like Vanguard and Renaissance Technologies have been increasing their stakes, which suggests that the smart cap desks are looking past today's 8.27% drop. If you are using SoFi Active Investing or a similar self-investing approach, it's easy to get spooked by this kind of red candle, but the institutional activity tells a story of accumulation during these dips. The trading volume today has been significantly higher than the 30-day average, indicating a high conviction move from both the bulls and the bears. Some of this is likely coming from the conversion of debt into preferred shares within the Ondas Network subsidiary, a move that cleans up the balance sheet but creates a temporary supply of shares that the market has to absorb. This is a far cry from the predictable behavior of the Schwab Intelligent Portfolios or a Standard Intelligent Portfolio that might favor low volatility assets. Ondas is a high beta play, and today is a reminder of what that looks like in practice. I want to pause here for a second and get your take on this. Comment below how many shares of Ondas Inc. you are currently holding, or if you prefer to stick to more established names like Tesla stock during these periods of sector-wide volatility. I'm curious to see if you think this Blue UAS list approval is enough to offset the dilution we are seeing from the capital raise. The broader sector momentum for defense technology in 2026 has been undeniable, with the Department of War making an aggressive pivot toward unmanned systems. This has created a rising tide for names across the board, but Ondas is positioning itself differently. Instead of just building a drone, they're building the entire private wireless network that these machines need to operate in contested environments. Their FullMax platform, which follows the IEEE 802.16T standard, standard is their secret weapon. It's why companies in rail, oil, gas, and utilities are signing up for their services even before the defense contracts fully kick in. When you look at the investment landscape through the lens of Fidelity Investments or Fidelity Wealth Management, these are the kinds of infrastructure moat plays that long-term analysts love. They're not just selling a product, they're selling the connectivity that makes the product viable. This is a distinct contrast to many of the IA penny stocks you might find on various online investing platforms that have plenty of hype but no actual hardware or proprietary spectrum. Historically, Ondas has been a story of high potential and heavy spending. They have spent years in the development phase, which led to a negative net margin of nearly 200% in late 2025. However, the shift we are seeing now in early 2026 is the transition to commercial scale. Their revenue targets for the year have been lifted to the $170 to $180 million range, a massive jump from where they were just 12 months ago. This is the part where the expectation of future profitability meets the reality of current operating expenses. For a trader using the Fidelity trading platform or Interactive Brokers fees as their cost basis, the path to break even is the only metric that matters right now. Management has signaled that 2026 could be the year they hit that milestone, especially as the RoboTeam tactical ground robotics begin to contribute to the top line more significantly. The integration of aerial and ground robotics into a single detect-to-defeat system, which they are showcasing at the Singapore Air Show, is a bold move to capture more of the $130 billion addressable market. If you are managing your own Fidelity IRAs or using SoFi ETFs to get exposure to this sector, you have to weigh the high price-to-sales ratio against this explosive growth. Compared to legacy defense contractors, Ondas looks expensive on paper, but legacy contractors don't have 500% estimated sales growth. The market is currently acting as a weighing machine for the company's ability to execute on its $65 million backlog. If the delivery of these autonomous systems stays on track, the current 11.26 price point might eventually look like a steal. But if they face supply chain issues or if the transition to the West Palm Beach headquarters causes operational friction, the bears will continue to hammer the stock. Many people who invest online or use investing sites often overlook the physical reality of manufacturing and shipping complex robotics. It's much harder than writing software, and that's where the execution risk lies. The institutional landscape for ONDS is changing as well. We are moving away from the era of pure venture-style speculation and into a phase where the big names like BlackRock and Citadel are taking positions. When these firms move in, the volatility usually begins to settle into a more defined range, though settle is a relative term for a stock like this. Those who are active in Robinhood stock trading or using the Robinhood app for fractional shares might notice that the bid-ask spreads on ONDS can be wider than what you see on something like Nvidia stock. This is why using a professional-grade Interactive Brokers account or the Fidelity mobile app to set limit orders is so important when dealing with these types of swings. Market orders in an 8% down session are a recipe for bad fills. Moving into the future outlook, there are several catalysts on the horizon that could flip the narrative back in favor of the bulls. The upcoming showcase in Singapore is more than just a marketing event. It's a chance for Ondas to prove that their unified command and control layer actually works in a coordinated environment. If they can demonstrate that their autonomous drones can talk to their ground robots without human intervention, it will validate their system of systems approach. This would likely lead to more upward revisions in analyst price targets, which currently sit at around $18. For those doing their own investment research on SoFi stocks or checking out investment help resources, that gap between the current 11.26 price and the $18 target represents a massive potential upside, but only if the company can maintain its current pace of contract wins. There is also the macroeconomic side to consider. In an environment where federal budgets are being scrutinized, the move toward cheaper autonomous systems is a headwind for old-school aerospace giants, but a massive tailwind for Ondas. The reality is that a drone-in-a-box system that provides 24/7 security is far more cost-effective than a manned security team or traditional patrol helicopters. This is the fundamental shift that is driving the demand for the Optimus drone and the Iron Iron Drone Raider. As more government agencies look to the Blue UAS list for secure U.S.-made technology, Ondas is perfectly positioned to capture that domestic spend. This is a story of national security as much as it is a story of technology, which adds a layer of stability to the long-term thesis that you don't always get with consumer-facing tech. The risk, of course, is that the company is currently a show-me story. The market has given them $1 billion in cash, now they have to show they can turn that cash into profit. The expectations are high sky, and as we saw today, any perceived weakness or simply the presence of share dilution can lead to a sharp pullback. For the self-investing crowd or those using a SoFi robo-advisor, this volatility is the price of admission for a company in this stage of its life cycle. It's not for the faint of heart, and it certainly requires a different strategy than holding a portfolio of Fidelity mutual funds or Fidelity ETFs. In summary, Ondas Inc. is at a crossroads where its operational success is currently being masked by the technical pressures of its recent capital raise. We started the day at a significant disadvantage, with the price dropping to 11.26, down over 8%. The reality of the situation